The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Welcome, folks. Tom O'Brien filling in for Steve this morning. Right now, you got the S&P's up $1.25, meaning 1.25. NASDAQ up 5.5. Gold is up 420. You got the, oil is down 106. We're at 76.12. Bonds, you got the 10-year up 3 ticks, 30 up 3 ticks. King dollar down 121 ticks. You got the euro up 27. The yen is trading flat at 115.45. We got our man, Mr. John Logan, with us. And if you come over to TFNN, folks, if you've been hearing John's show, he's got an outstanding show each and every trading day, 8 to 9 Eastern Standard Time. He uses a scanner that is very powerful, and we're launching that scanner today at TFNN. The way you can test drive it, 30 days absolutely free. Go to TFNN. You'll see it right in the profiles in the carousel. You hit that. There's 3 videos right there that you can see exactly how this works. It's not only an instrument that is powerful. You talk about the amount of time that you can save, and in one of the vehicles that he has inside that is a market breadth indicator, and that market breadth indicator, folks, is pretty wild because it breaks it down for you in a weekly, daily, and 240-minute as to where the market is. And I'm looking at it right now, and it's really intriguing in the context of how you made this, John, meaning just in the aspect, I see what just happened, this is interesting, in the aspect of red, blue, and green. Yep. And of course, what does happen, and this is going to be great for me particularly, because no, I'm not kidding. I just finished my daily newsletter, right? And I'm looking at this S&P. I'm saying to myself, okay, so what's the S&P waiting for? I mean, we've been at the same place for almost 2 months right now. But right. In fact, we're higher. Every single day we're higher. You know what I mean? It's only creeping, but we're higher. So it's like, okay, you haven't pulled away from the scene yet. The Dow has pulled away from it. And, one of the Tigers was saying yesterday, it looks like the small caps want to get up and hit it. And that's how it looks right now. Even though what you have right now, folks, is that the S&Ps themselves, they gave back some points. They're kind of flat. But this dollar doesn't look like it wants to get croaked. It's down slightly, so it looks like the dollar still wants to go up and hit that 2010 swing point. If that's the case, well, guess what? Then the market's going to be flat to higher. And, it may be that the market's just waiting for the small caps to get up there and whack that high. We've got close to it, that's for sure.
Yep. I agree with everything you're saying. It's hard. It's real easy to try to overthink what's going on here, and you just got, as a trader, kind of go with what's presented to you. And definitely there's some really good chances to make a lot of points on the upside or downside if you can figure out something that you can brace yourself. Almost dig in and hedge that bet. Right. If you're going to be wrong, again, it's like, let's try to lose as little as possible, and let's try to figure out what's the risky trade and what's the not so risky trade, and what's the parameters around that particular trade when we put it on. The breadth, to me, because you had initially started talking about that a while ago on the S&P specifically, and I've got my S&P chart up right now, and I've got July 24th here. Kind of pegged on my E-signal chart. Okay. But that's when we started migrating down, and we had about a 100-point S&P sell-off. Yeah. And on August 8th, we had kind of a turnaround. And around that July 23rd, 24th area, we had our long-term breadth of the S&P 500 change from positive to negative. And what does that mean? That means that factoring in all the internals, and this is provided to you on that scanner in a very simple to use kind of speedometer version now. Exactly. We had kind of charts and crossovers and all kinds of things to confuse people before, but I think the speedometer is really, it kind of just nuts and bolts kind of look at, okay, are we positive or negative?
Yes.
And what's the inside version? So what that means is we look at the internals of the marketplace, and we look at all S&P 500 stocks relative to a market profile look.
Okay,
right?
yeah.
And we say, you know what, are we balanced or imbalanced?
Right.
Okay, now that's the first thing. Okay, well, in a positive market breadth, we're imbalanced on the whole, looking at all the internals on the upside. All right, so that means that the market, the internals of the marketplace are relatively positive versus profiles which you've never been able to get before. Obviously, you can look at, okay, how many stocks are up, how many stocks are down.
One by one, yeah. You look at 500, and by the time that you finish the 500, the profiles are going to probably change.
Yeah.
But that's not the case with this software now, which is awesome, right?
Yeah, but if you're going to look at kind of, up stocks versus down stocks, not even relative to profiles, because that's all you've relatively had to look at before.
Yes.
Because somebody on TV go, well, the breadth was positive because 84 NASDAQ stocks were up and 17 were down or something like that.
Yes.
I mean, that basically mirrors the index moving. I mean, it's really not a lot of information that you can kind of get some forecasting with.
Okay.
Now, what this does. And again, I'm going to go back to one of the market turns on, July 24th.
Yeah.
We were talking on the radio when this happened, by the way, if you remember. I was like, Tom, this is crazy. I mean, we got most of the stocks in the S&P trading below profiles. How in the world are we going up here? Because we just changed the negative breadth.
Okay.
So what that means is, in an unweighted fashion, we want the pure, raw versions of what the internals are doing, and is there a disconnect in the market going up in this case, and actually most of the stocks going, you know what, I don't even want to get back into a balanced market situation. I want to stay on the bottom side of that balanced area, therefore imbalanced on the downside. I said a lot there, but that means that, that disconnect, that rubber band kind of going out too far is going to have to snap back, all right, because those internals generally in a high beta S&P 500 kind of way are going to kind of get back into an arbitrageable manner, all right? And that means that as the Brett changed to negative around July 24th, we stayed negative and then had the Brett change back to positive on August 8th, and that means that the short trade was over, right? Now, as that positive breath happened on August 8th, we never looked back until September 19th. So we were looking to buy support, buy breakouts,
crazy.
Buy support
Right.
all the way. Oh, yeah. It makes your life, if you're trading indices or trying to trade high beta stocks or trying to figure out, should I be buying stocks in general right now or should I be trying to sell resistance? It takes care of it for you, basically.
You know what's so cool? So check this out, folks, okay? So picture this. We're talking about right now the S&P 500, right? And the scan is going through all the 500 stocks, folks, okay?
Yep.
So for folks that trade equities, that's awesome. You can get the stronger ones or the weaker ones. But if you trade the futures, it gets even better, really, okay? Because you're basically looking at the 500, and that's all that really matters as to what's going on in the S&P. So it's like you're long a shot, okay? That being said, what ended up happening, of course, on the 22nd, as it went negative again, okay, it took all of like 2 days to really fall apart. Now, let me ask you this, because I remember the day you were on, right? And we crashed down to 1820, right? And then, of course, we bounced back up. And then I'm listening to you, and I'm at home. And at home, what happens, folks, which is so cool, if you don't know this, folks, okay, it's really dynamite. Your own TV, most TVs now are internet, accessible, okay? So I work out with Nico in the morning, and, the TV's normally on, and, you walk in, and I'm looking at you on this large screen TV, and I hear you say, oh, now you can't be shot, and I'm saying, oh, no, don't do this to me, man. Don't do this to me, right?
Sorry. I felt as in pain as you.
No. So listen, this is wicked, right? And I say to myself, hold it, man. There's no way that this changed so quick. Well, the bottom line, folks, we know that it did, okay? That actually, to me, it's impressive, period, okay? But what that did, that was even more impressive, John. Do you know what I mean? And folks, just so you understand something, John and I were on the phone when this was changing up at the highs and saying, yeah, man, this is it. This is it. It's going down. And sure enough, it did. But the flip side of that is so important, too, because I'm saying to myself, man, that was a quick flip, man. And, of course, we know that it was a quick flip, you know. We didn't know. I didn't know that then, okay, but now, you know, the bottom line is that that's what happened, so.
Well, my gut trader feelings, if you will, are still sometimes in play, and I can't shake them as easy as I want to. And my gut feeling is that even when we had a 200-point sell-off, a 10% correction, and we called it to the day it happened with that market breadth on September 19th.
Yeah.
We didn't get the change around till, you know, I think on the dailies around the 17th, right? So, you know, we gave back some points there. I mean, but, you know, this thing has really – and then we changed positive there, and then –
but that was still really low. That's my point. The 17th. So watch this, folks. Okay, when it hit the last low, it was 1820, but it closed at 1862, and that's what was, you know, almost freaking me out basically, because I said, I was saying, hold it, man, we're not even at 1900 yet, and you know. You're basically saying it changed again, and it did. But I'm just saying, oh, you got to be kidding. No, this can't be. That's what I'm saying in my own head. This can't be.
Well, I was thinking that we'd at least try to maybe revisit some lower numbers, but we never looked back.
Yeah, I know. No, I know.
And because of that, you know, go down and never even retrace back down at all again, and the market breadth turning positive, I was like, you know what, do I want to be an idiot and actually argue against myself here?
No, not when you know what's behind the deal, which is sweet.
Right.
Do you know what I mean?
Right.
Yeah.
Right. And then you go into the S&Ps, and I've got, you know, I don't know if Al's showing my chart now, but you look at the S&P 500 futures, and if you're trading the S&P 500 futures, there's two things going on. The market breadth is telling you positive or negative, which is long or short.
Yes.
And you're also looking at the inflection points on the index itself. All right. So as you know that you can short this thing from September 19th onward, you're looking for inflection points on the index itself to try to gain leverage on where you should pick your battles on that short side.
Right.
All right. So as you kind of use the profiles on the S&Ps to regulate yourself down and then regulate yourself up, that's also provided within the scanner, because those inflection points, if I pull them up on the future side and go to S&P 500 futures, I know the battle areas. So I know the market. Oh,
that's cool. Okay.
Yeah, you really don't need charts.
That is,
I mean, if you think about it.
I got it. Yeah, I got it. Okay.
Yeah, I mean, it's just a self-regulating process in that scanner. And right now, to this day, to this morning, on the long term and all the way down to the short term, and intraday this may change on the shorter term, but we're still breadth positive, and you know, I can't argue to go short right now.
I can see that. I got right now. I got what? The weekly, you're at what? You're way green. The daily, you're green, and the 240 minute, you're green. You stay right there, folks. John Logan, Tom O'Brien. We're going to be coming right back. Folks, you can test drive the scanner right here, right now. 30 days, absolutely free. Just launched it today. Go to the front page of TFNN. You're going to see it right in the carousel. It's 3 nice videos that John had done. John and I are coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now we got the mini S&Ps up $1.50. You get NASDAQ, the NQ's up 6. Gold is up 3.20. We get silver up 4 pennies, and bonds are flat. 10's flat, 30's flat. King dollar down 91 ticks. We're talking with our man, Mr. John Logan. And don't forget, folks, at TFNN, we start live programming every trading day, 8 o'clock in the morning to 6 in the afternoon. You can get all that programming right on your cell phone, TFNN.mobi. As you come over to TFNN, what you're going to see in the front page right now is you're going to see the TAS Market Profile Scanner. We launched this product today. It's an amazing product. You can test drive it right now, absolutely free. And this product, by the way, folks, okay, you're talking about multiple markets, multiple time frames, and you're not paying for quotes. You're not paying for anything. First month, in fact, basically you're just test driving it. There's 3 videos that are right underneath it. It's a very powerful piece of software that lets you walk through the market very quickly. So check it out on the front page of TFNN. Market-wise out here, John, it's going to be interesting. We're at Thursday again. It's hard to believe that the week is going to be ended. And what happens, folks, is this: is that even though Europe hasn't been able to hold markets, the DAX, the FTSE, were down, have been down. They haven't hit their highs. Our own markets have basically been flat. And it's going to be hard to sell off by the end of the week here. So it's going to be intriguing. And then, of course, we get into Thanksgiving, right? And you know, we'll see how this whole thing shakes out. But it's amazing to me that the euro, the dollar, well, it's the dollar that's running the deals right now. So it's going to be like, okay, so what does that mean? You know, and I don't know what that means right now. But I do know that the market itself does not like. Before, the market didn't like the strong dollar. Now the market loves a strong dollar and doesn't like a weak dollar. Isn't that wild?
Yeah, who wins that game? You know, I mean, that's like we were talking about with the note, you know, with the notes and the S&Ps earlier. I mean, I was in Chicago, and you know, like that was just a constant. Who is actually right? Right, and the notes were usually right, but the dollar, I don't know who's going to be right here on the dollar. The market,
I know,
I have no idea.
I know, and well, you bring up a great point because because we're so close to that swing point on the dollar, I'm keeping my eye on that 88.80. But more so, I'm keeping my eye on the bonds. So the bonds are going to be right. The bonds are always right. That's what it really comes down to. You know, you're going to hear through the years that, oh, where are the bond, what do they used to call them? You know, the bond people keep everyone in line. But the bonds, that spike up there, you know, I was cracking up in the Wall Street Journal, folks. It had, they were trying to figure out the SEC, CTFC, everyone's trying to figure out, okay, what happened when rates, you know, went under 2% on the 15th and like a heartbeat, which, you know, and the bonds went from 127 to 130. It's like, really? And what you can see, folks, this is what's so weird about this, right? These are the regulators that's supposed to know what's going on, particularly the CTFC, okay? And the reason I'm saying that is CTFC, most of those guys have traded, okay? The SEC, they probably never traded in their life. That's all that was, folks, is that everyone shot the bonds. It's like, it's electronic trading. Of course it went there, okay? It went there because the amount of shots in the position are insane. And then, of course, they're closing them, and they're going to buy to close, and that does it. And once the buy to close is done, okay, well, it's done, you know, so.
And you know what? Probably everybody's not out of that trade yet.
Oh, no.
And it kind of feels that way, you know. Like, and I always try to, you know, me and you always talk about this. It's like, you know, where do we kind of mitigate the risk? Like, I think that going along the bonds and the notes right now, relative to how they've acted on this market climb, with stops in place, of course, is the least riskiest trade on the books than trying to buy the S&Ps up here, even though the breadth is still positive and all that kind of jazz.
No, I agree.
To try to short the S&Ps here is scary.
Right.
But to try to go to, you know, but if the S&Ps come down and you're right, guess what? The bonds are going to go up anyway in this environment.
I agree.
So this is the free, you know, I don't want to call it a free trade, but this is the least riskiest trade on the books right now.
And the bonds, there's no doubt that bond market is the thing that is even keeping me. I'm saying to myself, okay, if in fact this market wants to continue higher, why won't the bonds go lower? You know, and then when you look at the texture of the world, folks, and the texture of the world, this is where, you know, you can put basically a fundamental together and say, hey, our rates are really high. Okay, a 10-year at 2.3% right now is high in the context.
Exactly right.
Yeah, it's insane. You know, what, you're going to give money to France at 1.1? Why?
And the fear in the Treasury market, too, is not that they've changed their tone from a central government standpoint. They're afraid that other governments are going to, like, come in and actually go in and undercut it. So why wouldn't they be scared that the bonds, you know, would continue to go up?
No doubt.
They're probably going to continue to go up.
Hey, can you stay another break? Another segment? Yeah. Awesome, man. You stay right there. John Logan, Tom O'Brien. We'll come right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. John Logan, Tom O'Brien. Appreciate you growling and prowling with us out here. Dow right now is up 25. Nasdaq's up 8. S&Ps are up 2. You get the Nasdaq futures up 650. And this thing didn't take long to flip around, that's for sure. I'm telling you, man.
It's just the way things are right now.
It is. So watch, folks. Okay, and it really is. So you take a look at the mini S&P. Okay, this is about as wild as it gets. It really is. It's only a few points, but it's the point of what we're talking about, folks. So yeah, you had you're at 2042 at 0600. You know, you get down to 2033, you know, all of 20 minutes ago, and bang, as soon as the bell goes, bang. The first buy out here, too, folks, and this is what you want to get your head wrapped around. It's not that it's the first buy, because what you have, folks, is the futures market is open 23 and a half hours a day. What you have is that whoever is basically juicing their own portfolios, meaning the operators, they came in at 9:30, okay, at 9:40, and bought 42,000 contracts in the S&P. It's like, really? No, you didn't. And that's it, right? I mean, because just to get the baby going, and they did it. They got it going. This is a big blurb. I mean, if you happen to be watching Tiger TV and you're watching the screen, you can see the amount that came in, and they come in fast and furious, man. You know, so.
Yeah. Well, until staying on the same theme, and until we get some changes in that breadth,
right?
I just don't even. I'm not. The only thing I would even consider kind of a change of tone right now, even without the breadth changing or even getting back to a middle ground, would be to be getting back below 2019, 2014, 15. I mean, but we're pretty far above there. We could get a new profile appearing up here that would give us some new areas to kind of key off of. But right now, it just you just don't have a lot of leverage on the short side right now, and I'd just kind of be patient if you're considering shorting. You might have a better opportunity higher or lower, because right now it's kind of a crapshoot, and all things are actually pointing to this thing moving higher, actually. Unbelievably so. But
yeah, no, listen, you can see it. And when you're using the scanner, this was really cool, folks. When you're using the scanner, one of the first things that you'll see that is going to turn, okay? So when you're test driving the scanner, you're going to see there's a bullhorn on the left-hand side. You hit that bullhorn, and what it does, it brings up 3 different clocks in the weekly, daily, and 20 minute 240. And what you're going to see...
It's actually 62.
I got to move it down. Actually. Shame on me.
Yeah,
that's even better. Oh, look at that. Oh, I like it. That's even better. Oh, man. See, now I can trade like a bed bug, John. That's good. I like that. Oh, look at that.
Yeah.
So right now, watch, folks. On the 60, when it says 32.6, okay, so that's 32.6%. I mean, it's right into the green. But what am I reading when it says 32.6, John?
Okay, you're looking at the S&Ps. Let me go to my S&Ps.
Yeah.
I was looking at the NASDAQ, actually. So what 32.6 means, there's actually a lot going on in the background to produce this speedometer. It's not a gimmick. This is a hardcore, get your arms wrapped around the S&P 500 internals type of meter here. But what it does is it basically, see that blue area in the top? That is how thin or wide the inside profile amounts are. Now, what we did, and again, we're trying to make this, we're always open to suggestions. I mean, we can kind of, disseminate information in a zillion different ways here, but for the quick, easy read, we said, you know what, and if you look at the other dials above, like the daily and the 240, you'll see the blue area getting thicker and thicker. That means that the inside the profile amount of stocks on the 60 minutes is actually relatively thin. That means that you've got 33%, and that's a function of the amount of stocks above profiles versus the amount of stocks below profiles, and creating just a very valid number that you can read that says there's a 33% difference on the upside between stocks that are up and stocks that are down.
Wow.
And that kind of gives you in one quick little picture. Okay, and what's going to happen is when it gets closer to the zero line where the blue meets the green, that's our zero line.
Okay.
It'll flip, never lie. It's just kind of a gauge to tell you how many stocks are trading within profiles right now. So as it starts turning negative, when it gets all the way to the green, last little green bar there, if the breadth turns negative, which means the amount of stocks trading below profiles actually increases above the amount of stocks trading below profiles, it'll actually turn to red, and that'll mean that the breadth on a short-term basis has crossed over. Now, when we had that big sell-off, that 200-point sell-off, things were so overextended on the downside that it took a little while. We talked about, we gave back a couple of points. I think we ended up making like 150 points on the down move instead of 200 before the breadth changed on the long term. But, it took a while for those stocks. They were so far below profiles for either a new profile to appear or just for that price action to get back into the profile way above that it was so far extended below. So that was a little bit of a weird situation. It was such a massive sell-off so quick that it took a little while to kind of re-gauge itself at the bottom. But I'm not going to complain about making 150 points on the downside. No. It
was so cool, man. Is that there's no doubt. It's like the 60, the 240. When they line up like this, man, it's like just. And in my case, great. I'll just sit here and wait. To me, it's a waiting game, okay? Because I can't go long at this point. But I can, but I don't want to. But it's a waiting game.
You.
At least I don't, so I'm not in the market. Big freaking deal. You know what I mean?
I hear you. But like on that down move, now the 60s and the 240s started crossing back positive after about, a 10-point retracement or 15-point retracement from the bottom. So as we got down into, what was our low numbers there, 1820 or something?
Yeah, 1820, yeah.
18, okay, 1820. As we got back up into like 1835, then these 60 minutes and 240 minutes actually changed to breadth positive. So if you were trading on a little bit shorter term time frame level and not wanting to kind of stay with the long-term trend down, and wanted to kind of do a ricochet kind of, against the long-term trend down, you had some reasons to try to trade that bounce a little bit earlier. Now, I don't consider that super valid in the grand scheme of things, but it starts giving you early indications that some things are changing as far as breadth. We are having some kind of bounce mechanisms internally happen, and those are tradable instances.
No doubt.
But again, I kind of everybody's got a different trading plan, Tom. Just like you do, I do.
Right.
And my MO these days is kind of looking at standing back and looking at a little bit more broader kind of move thing. And I'm kind of maybe it's my age or whatever, but I'm kind of done with the short term trading for the most part. So and that's why I love this thing. So.
Oh, geez, I don't know. I guess I better take some of the juice you taking if you're done with the short term trading.
not totally, but
I'm only kidding, man. It's all,
I used to have 10 screens up and all these lights flashing.
No, listen, I know that. What I'm hearing too, and there's no doubt, folks. Okay, when you've had the types of moves, okay, that we have, there's definitely opportunity for some long-term moves here. That's what it really comes down to. Well, there should be. That's
and you know what? Like, it's a public fact, really, that the more often people trade, probably the less chances they have to move, to make money. I mean, like day traders, a lot of hardcore, very, very short-term day traders don't make money.
Right.
And it's just like let the market come to you. Be patient. I'm not talking about trading 5 times a year only, but I'm saying,
no. There's no doubt. There's no doubt that the bigger. I mean, if you can be in the market even 60% of the year, that's when you get the larger trends. There's no doubt about it, man. I mean, the market goes sideways, folks, whether you're going down or up about 40% of the time. You know what I mean? It's a waiting game. It's a waiting game. You either break out or break down.
Yeah, and you know what? On that same note, I don't know if you caught the show yesterday, but I had actually talked to a buddy of mine in Hong Kong who runs FXCM's Asian operations for their currency operations. That's a big reputable,
it's huge, right?
Organization. And I said, how's things going, man? We've got some great action, and the yen's been doing what it's supposed to, and the euro's killing itself going down, and the pound and the Aussie dollar is starting to do the same thing, and we've been spot on some of these moves. You guys got to be happy. Everybody's been making money. He goes, you know what, John? He goes, we've had the worst last 2 or 3 months that we've ever had because people have actually held on to winning positions, and they're following these central bank kind of MOs and technical setups that are there. And he goes, nobody's trading, everybody's making a killing, but we're not generating any revenues because everybody's hanging on to positions. And I was like, okay, well that makes sense, I guess.
No, well, I mean, there is no doubt in in the United States, folks, folks don't trade currencies as much as they do in Asia, okay? Bottom line, in Asia, you get those housewives in Asia. Let me tell you something. They'll take all of us to the cleaners. And, what I've seen, they trade a lot, man. Do you know what I mean? And they get together and they decided, I mean, Abe told them that, hey, listen, we're going to make this yen weaker. And that's food for thought. And I can picture that, okay, well, this is great. You know what? I can go shot my own yen right now. The government's going to dig it. I'm going to make money. And,
why not?
We'll pile on. I know, man. Pretty amazing.
Yeah, not to label a group a certain way, but like the mentality over here more so is I don't even know how to say this properly, politically correct, but it's a little more. Gambling is a little bit more of a piece of the society than it is in the States, you know?
Oh, no, you know what it is? I'm glad you're bringing this up. This is, folks, if you don't get it, we get the biggest propaganda machine in the world. What has happened over here, this is the only difference. This is the difference I see, John, right? We know that Asians love to gamble. I love to gamble. You love to gamble. What the difference is, folks, is that the Fidelities of the world and everyone else has explained to people that you're not gambling and if you're in the marketplace. That, folks, is a joke. You're gambling, right. Okay?
Yeah.
What has happened in the United States is that the banking machine, has wrapped this deal into a texture that, no, that's not it. Do you know, and I picked this up, folks, in 1994. The reason being is that we were day trading. And I remember Fidelity saying on a continual basis, this is terrible. And I'm looking at the stats. Fidelity to this day is the biggest day trader out there. Go look at their funds. Look at the turn. Look at their clients, okay? The bottom line is that the only difference is that you don't, the perception is that we're in the markets and you're not gambling. Well, guess what? It's gambling, folks, okay?
Yeah, well, they keep the the ties and the white shoes on, and they try to stay up like it's above all that. I mean, like, let's just
listen to this. Oh, I'm so glad you're saying this. Listen to this.
Go ahead.
We were down this past weekend, right? My son, Bridget, his girlfriend, we were down in the Vinoy, and we were having some fun at the Vinoy for the weekend, right? And because I've been down in Florida for a while now, and what happens in the trading business, folks, in the trading business, everyone doesn't have a suit and tie on, okay? And all of a sudden, in the whole hotel, I'm saying, man, I've never been around so many suits and ties in a long time, right? And I was saying to Bridget, I said, I used to dress like that every day like 20 years ago. Do you know what I mean?
Yeah.
And I'm saying, I wonder what's going on. Well, guess what was going on? There was a big bank that was there, right? And that's what was going on. And it was strange, man. And it was really different. It really was, because being away from that for so long is like, whoa. And then it's the same context that we're talking about, but.
Yeah, we used to, back, when I was involved with that Bank of America operation that got sold to them,
right.
I was, putting out information in there, some technical indicators, things like that, in addition to writing software. And all the firms that we were dealing with, Bank of America included, and I'm quoting them, they were saying, John, stop creating all these trade suppressors where people actually wait patiently to trade. He goes, we don't want them to wait patiently to trade. We just want them to trade.
Yeah,
our money is made off transactions, so why don't you just
Yeah.
I mean, I was like, what? Are you crazy? You don't care if people make money. You just, so again, that's just the way it is, No
doubt. Market-wise right now, folks, this Dow's pulling away. That's Walmart. Walmart is gapped away. Dow's up 55, Nasdaq's up 19, S&Ps are up 4.5. We got gold up $1.90. If we go over to Walmart and take a look at Walmart out here this morning, Walmart is up $2.99, trading at $82. And what's intriguing here is that they actually, I believe that they didn't hit their revenue number, but the Walmart, the world's largest retailer, posted third-quarter earnings that beat analyst estimates after U.S. same-store sales grew for the first time in 7 quarters. Oh, interesting. Earnings amounted to $1.15 a share for the period versus $1.12, but they didn't make their revenue. It's interesting, man. Hey, John, thank you so much, man. You have a great day, a safe day, and, of course, we look forward to the show tomorrow. And, folks, you can test drive the scanner right here, right now. Come over to TFNN, right in the front page.
Thanks, Tom.
Thanks so much, man. Real pleasure. Stay right there, folks. Coming right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Tom O'Brien, Steve Rhodes is going to be coming right up at 10 o'clock. And, folks, you just heard the promotion. Steve has an outstanding workshop that's coming up. Now, this is a 7-week trading course, okay? It's only $395. You're going to get 2 separate webinars, 6 weeks of follow-through. Come over to the front page of our website at TFNN. You're going to see it right on the front page, okay? The first webinar is going to be a week from this Saturday. That's going to go from 9 to 12 Eastern Standard Time, and what you're going to get there is you're going to get all the rules, you're going to get what the patterns, you're going to get what you're looking for. The next 6 weeks, what you're going to get is a follow-through as to what's going on with these rules, with these patterns. Then what Steve's going to do on the 9th of January is that on a Friday morning, when the markets are open, you're going to do another 3 hours, 9 to 12, when the markets are open. All of that is only for $3.95, and that will be archived on your page. So if you can't make it in person, you can go over it as many times as you like. Market-wise out here, what you have out here this morning, dollar index still won't pull back. That's the real bottom line. This dollar, it wants to go up. Oh, I can see how it's trading right now, too. So check this out. You're only at 12,000 contracts. It's rejecting lower price. We got to 87.70. It's 87.80. This thing wants to launch this 88.80. So if we go over there, you're going to be hearing this until it launches it. That's the real bottom line. And we'll see just how it comes into this level, because what we've done now is that you're 7 days going sideways. So this thing is building cause. And, of course, when you build cause at higher levels, your higher swing point. So in 2008 and 9, folks, okay, when the market was going south in a big way, the dollar got all the way up to 89.40, I think, 89.71. Those levels right there very well could get tested. The last spike was in 2010. We got 88.80. You know, so we'll see how it gets into that level. But it looks to me that that market is waiting for it in a big way. Now the small caps. Okay, if we go over to the Russell 2000 for a second, and Tiger J in the den, he was looking at this yesterday, and there's no doubt that's what's going on. I suspect that's going to get tagged. You know, we're at 1188. 1192 is the low of the high that was generated on July 1st. That 1212 wants to get hit. And the small caps themselves, it's taken them a long time to get up and test these higher levels, but that's what it looks like it wants to do. What has divergence, no doubt, is the aspect that Europe basically is not following here. What has just happened, though, in Europe is that those markets did turn around, meaning that what you had there is that Europe is at 92, or DAX is at 92.32. So it's like, you know, the high in the DAX is up there at the 10,000 level. And, you know, one of the questions is the higher dollar, does that mean gold lower? Well, that is the correlation. There's no doubt. That is the correlation. I guess the key is going to be, is it just a spike higher into that level, and it's a highly volatile day, and we have the bond spike simultaneously, and gold would spike simultaneously, because what that would mean, and I don't mean spiking down, I mean spiking up, because that correlation would be a disconnect in the marketplace. So picture this. The bullish and bearish deal inside the dollar goes like this. As the dollar gets higher, we all have a lot more money no matter where we are in the world. That's huge, and that's what we want, no doubt. You have a faster currency move and this thing really spikes, oh baby, those big companies are going to lose a fortune. You stay right there, man. Mr. Steve Rhodes coming up next. Dow Industrials right now up 57, Nasdaq's up 22, S&Ps are up 4.5. Steve's coming right back with you, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.